What's going on, everybody? Mando Trading here on September 23rd, 2023. In this video, we're going to go through some trade setups that occurred, just show you them in action, and we'll be able to identify which trade setups would be more favorable in terms of, my criteria versus trades that I may not have taken for specific reasons that we'll obviously get into. We'll also look at these are going to be all on the 30-minute time frame, so that anyone who isn't actively intraday trading on a smaller time frame can see how this model is going to work on whatever time frame that you want to take a look at. So if you haven't already, please subscribe so I know I'm not making these videos for myself. Drop a like, and if you comment after the video, let me know what you think. And if you have any suggestions for a future video, let me know. So let's get into it here. If you're looking for a market newsletter, check out mine, Markets with Mando. It's recently been featured on Benzinga, Webull, TOS. First month free using code August100. I'll put the link in the bio. All right, so first let's take a look at SPY, SPY on the 30-minute time frame. If we look right here, we have our swing high. We have our low taken out right here. So this would be a bearish market structure shift to the downside. We also know that this turned out to be support, and this support level dates back to, it's going to be quite a while, quite a scroll here. Let's see. This is why these levels are valid. That's why I keep them on the chart. This dates all the way back into June, so the last time we were down in this area, obviously. But if we take a look and we continue on, we will notice that following that bearish market structure shift, we find support, retrace higher back into our golden pocket, 0.62 to 0.79, and specifically a bearish imbalance in that range. And there we have it right here. This candle at 2 o'clock on Thursday turned out to be the winning bearish imbalance in this range for us to reject lower, head to our next level of support, taking out the low. And that is essentially the setup to a T, right? We have a bearish imbalance in our discount bearish range, right? If we were to flip this over and we look and we see, let's just say, for instance, we have a bullish range set up, it would essentially just be the low to the high where you have the 0.62 to 0.79 down in your discount range on a bullish setup. So I might, I use it in that sense, and others would say in premium, but if we're talking about a bearish setup, I would refrain from calling this premium just because this is actually discount for your short, right? Down here would be chasing or overpaying for your short. When we have a larger range, we know from back testing, from using this model for quite a long time at this point, that over the 50%, specifically within this 0.62 to 0.79, this is discount. This is where reversals tend to happen. So this would be perfect. Also perfectly maps out your trade plan right off the bat, right? You have, for instance, here's your bearish imbalance, right? Right at 433.69, I believe. Nice. And the high of that would be at 434.27. So essentially you're risking, what, 50 cents to make a potential $4, $3.50 on that contract. So that checks out for me. Also, I know with a break over this level right here, I'm probably going to get out, as this right here would likely be the bullish market structure shift. That could change things up quite a bit. So again, it really just sets up a nice trade plan right off the bat, from doing this over and over again. And hopefully you guys can see use in this, and you can start to look for yourself, and you will notice as well that this setup works quite often. It's hard to say, and obviously nothing is 100%, especially in trading, but for this setup to be 100% successful, we would only go in one direction, essentially. We would never get those market structure shifts ever. So obviously we know that doesn't happen. So there will be times where this doesn't work out and we do get a break over this level here. And in that case, you lose. But that's why mapping out the trade prior to, knowing where your stop loss is going to be, where you're going to be taking profits, that is a huge help and really sets up for some nice risk reward trades. So obviously this was perfect, played out to a T. If I'm not mistaken, we'll go over to Apple here, and I don't think Apple would be one that I would trade. Yeah, it wasn't. Okay. I'm sorry. It would have been one where I would have lost on this trade if I were to take it. So let's just go back. Here is your range. So we have swing low taken out with this price run lower. We have our retracement back up into our discount, right? Above 50% when we're talking bearish would be our discount for our short. While we did get it, right? And that's why it is important to actively manage this thing and be able to take profits along the way until the ultimate target destination. But we didn't quite take out this low yet. So that would be red flag numero uno for me heading into this trade. We also have a bullish imbalance that we ended up holding on to before our next leg higher, taking out this high right here. Now, that would be realistically the number one reason why I didn't take this trade. But anyways, even if you were to take this trade, yes, you would have taken a loss on it, a 175.67 to 176.34, so about 70 cents. And this stinks, of course, but the trade would have played out for you. But to kind of absorb that much risk, to me, it's not even worth it. And that's why I like when they have imbalances deeper in discount, specifically in this golden pocket range, right? This one was starting right around the 50% level. So while it worked, it would have been one where I got stopped out on or wouldn't have even taken, and this would have been my red flag. It worked the first time, but we did not take out the low. And for that reason, it wouldn't have been a likely setup for me. Because if we look at it from the flip side, which we can do, we have a market structure shift here, right? We took that high. Now, what would be the price run that took out that high? And it would be from that low to this high here. Whoops. Okay, right there. Now, let's zoom in a little bit more. I'm going to remove the previous level right there, or range map, I should say. Now, if we look in this vicinity right here, we did have this bullish imbalance right here, right on this candle, in discount, right, meets all criteria. We do have a balanced price range, so an imbalance through another imbalance, price free and easy to move whichever direction from this point we would expect, right? And we can also use, if this were to get broken above, we can use this as an inverse, so previous resistance turn support, because that is a bearish imbalance right here. You have your wick, body, wick. In between this candle, we are not contested on either side. And not to mention, we also had this bullish imbalance right here. We held it the first time, second time through to the tick, absolutely, right here. And the expectation for bulls at this point would be for swing high at 177.07 to be taken out. And again, same stop loss rules would apply. Where would market structure shift back to the bears? At this point, it would be 174.05. So in essence, of course, if you're taking the trade here, you could have potentially stopped out, but we never really got a 30-minute close below any of these levels. So while trading on a 30-minute time frame, I'm obviously not going to be trading 0 DTEs or something like that, but you can kind of go into it with the understanding that if we don't disconnect or leave one of these levels, to me, they're still valid. So this plays, we're still inside it, right? Never disconnected from this bullish imbalance. We obviously use this one as support. So from here, again, the expectations would be 177.07 swing high to get taken out with a stop loss below this 174.05, and that's setting up a very solid risk reward to the upside here with, what do we have? Realistically, in risk, you're risking 90 cents for a potential 2 and 10. So not exactly the greatest risk reward in the world, but still good enough where you're going to make some money on that while also limiting your risk to the downside. So that's Apple. That would be one where, again, a little more sloppy, not exactly fitting the criteria to a T, and, wouldn't exactly be interested in that. Tesla was another good one here. So if we take a look, let's just zoom in a little bit on this thing. So we see we have a swing high. What was the price run that took out this low right here? This price run right here. Retracement back up into our 0.62, 0.79, bearish imbalance, check, check, check. And there's your meltdown. This actually melted down quite a bit, down to 242.47, which is 1.5 standard deviations away from this initial move right here, right? Your next question might be, why would you use that as your swing high, swing low? Well, if we just remove that for a second and we look over here, let's go. So we would say, what took out this low? This price run right here. There it is. There's your range mapped. Your low, retracement back up into where? Your 0.62 to 0.79. Rejection lower, took out swing low. And then all it is, folks, is we have a new swing range. We have a new low taken out. And obviously with hindsight, and this happened overnight, so it actually is pretty helpful, but this is the low at that point, right? And when do we know when something is actually the low for a price run? For me, the rule of thumb would be, did price retrace back up into this level? If it didn't retrace back up into this level, I would just continue to drag until we found that actual low. So Tesla, this was beautiful, multiple opportunities, and that's something that I think you will notice along the way, that when you're in a bearish trend, you can continuously maneuver your measurement. I use the fibs for it. I'm not trading off of fibs, but again, it's something that through back testing, through practice, you'll be able to see over and over again, repeat, and it is quite nice to have, a lot of confidence in a trade setup while also being able to manage your risk extremely well, right? Your entry could have been here at 257.67 with a stop loss at 258.61. I like to squeak it a little bit higher, just to see if there is any willingness to go over that level. Oftentimes it will actually just top ticket, and if you don't have your stop position just a tad higher, it can wipe you out prior to it. And obviously that's with me trading futures and having the stop loss right on screen through the Trade of 8 extension on TradingView. But again, perfect, beautiful setup on Tesla right here. Now let's take a look over at Amazon. Amazon again, right over here. And this is one that would have stunk, but let's just look for a second. Okay, I think it would be fair for us to say that this would be our swing high, our price run down into these lows right here. And let me just make sure this is actually precise. Hold on, boom. Yeah, right. So let's just, we're gonna have to scroll over quite a bit to see that we took out an additional low in the process there, but here would be the price run that took out these lows, our retracement back higher. We got into the bearish imbalance. We did not get to the 50% level. So for me, that is one where I'm not going to take. Unfortunately, it did run down through that 128.70, that swing low. So it stinks. You miss out on a trade opportunity. But on the flip side of that, just in terms of striving for discipline, we very well could have retraced lower and, got our next little leg higher into discount, and then we're holding the bag and, maybe down a little bit more, and we need that extra little push on the move just to get that money back that we just lost on theta, whatever it might be. So with, this type of setup, while it is, it worked out perfectly, it's still not one that really meets the criteria for my model. And that's just me staying disciplined with my approach and not jumping, just to get into something. I would prefer to really show me that it can meet the criteria, and from there move lower. Now on the flip side of that, in a situation where we have multiple imbalances like we do here, there are really two methods that I've taken depending on the size of the range on how I want to kind of attack those. So the first would be, I can almost give it a try on every single one of these. I know I'm only risking 40 cents, 50 cents per And this one would be, yep, this is 40. This one's a little larger, but let's see. That one is about 70 cents. So I'm risking less than $1 per attempt here, knowing that I have a potential at taking away $3-4 on said move. So that again comes back to discipline. Do you have the ability to take a loss? If you don't have an ability to take a loss, trading is going to be quite difficult for you. It's kind of the name of the game. At some point you are going to lose. And I made a video on this if you want to check it out. I actually released it Saturday. So you can kind of check that one out and see. But I got two more here. And this was perfect. You have Microsoft right here. The low here was taken out with what price run? This high down to this low. Retracement back up to where? Discount, 50%, bearish imbalance. This is the only bearish imbalance in this range, right? Now, this is where things could get a little tricky. And again, it depends on what time frame you're looking at. If you're looking at a 30-minute time frame, do you have the ability to hold on through this potential wick, right? We never closed above this. There was no confirmation whatsoever. Did you get scared out with the wick? Did you maintain composure and hold while still respecting the premise of the setup? If so, you're successful and this thing ran back down. That's a $7 move, right? So essentially, you're risking a close above this level, which at most, realistically, is probably going to be a, $3, $2 loss versus what you can make on the downside here. That's about $7. So, and in this situation here, where can we look as an all-out stop, right? Say we kind of get up into this area and we chop around a little bit. Like, what would be our all-out stop in that situation? Really, a break of this high here. From that point, we could say, oh, that is a market structure shift. We'll look for the bullish retracement and then go from there. But obviously, we didn't have that. We had a perfect rejection off of that 50% level. And we moved down, taking out the low in the process. And again, that would be a very ideal setup. Now for the last one here, AMD. If I recall, this one's perfect as well. But there was a caveat to it. So, all right, here it is. Now, we look at AMD. So in this situation here, we can use this high as our swing high. We broke lows. We found support right here. We bounce from this point and we get right up into that 0.62 to 0.79 range and we melt. We do end up taking the low out, right here. Now, why would this not be something that I'd be in love with taking? One, we really don't have any bearish imbalance in this vicinity right here. We do have a bearish order block, which you have right here, the up close candle, down close candle that overwhelms the previous. And we would use that level right there as, or this candle, I should say, as your bearish order block. But that's not, again, it doesn't really follow the model. I look for those imbalances, not so much the order blocks. So while, yes, this did work perfectly, it just didn't give me that extra little kick of confidence that I would prefer to have taken this trade and taken it down with me. But again, those are just a couple of the setups. Again, this is on a 30-minute time frame. So looking at a 30-minute time frame, you want to be able to give yourself a little breathing room. I mean by time on that, so that if you do get one of those radical wicks, you can allow that to kind of play out for you and not jump the gun and get stopped out on something that, turns out to be a total winner. So until next time, again, I appreciate you guys watching. If you like the video, please let me know. I appreciate that, and we'll talk soon.